It is Tuesday, August 17th, 2021. I am Ashley Pollard here for today's edition of Tuesday Talk, where we review common real estate and mortgage related terms. Today's term is title insurance policy, and I've got several points to go over, so I'm actually going to rely on my notes today because I'm not going to memorize all this stuff. But a title insurance policy insures against loss for defects that may come up when public records are searched. So it's a policy is going to basically tell the buyer that the seller is conveying to them a marketable title. And the term marketable really just refers to the title being free and clear of liens, encumbrances, and there's no other person that's going to come about and say that they have ownership rights to that property. And also, one thing to note before we get into this, title insurance is not mandatory for a sale, but it is highly recommended, and you'll see why when I let you know what types of things are covered in the policy. So the insurance company, they're going to examine the title records before they agree to insure against any defects that pop up. Now, when you hear the term defect, you're probably like, well, what's a defect? So some examples of things that are included are forged documents, incorrect marital statements, also documents signed by incompetent parties. That might be a child signing a legal document or someone who's not in the right state of mind who has signed a legal document. Those things will be covered. Some things that are not covered, let's say something that's discoverable by a survey. So a survey, I'll define maybe next week. A survey is going to let you know the boundaries of a property. There's metal markers in the ground that you can scan for, and the title insurance policy is not going to insure against any defect that arises due to a survey. So their surveys are unfortunately not mandated anymore. They used to be a part of sales, and the buyer would get one when they would buy a house, but most lenders don't require them anymore. So buyers trying to save money because closing costs and down payments are expensive, they don't order surveys. It's a really good idea to have a survey so that you know exactly what the boundaries of your property are, and there can be no issues in the future where someone is claiming ownership rights to property that actually belongs to you. So that's not going to be covered in the policy. Also, unrecorded documents are not covered. So this is going to be any document that might exist legally but was not recorded in the public record. You have to record everything in the public record, otherwise it might as well not exist. So example, a seller promises you and someone else ownership to a property. Well, you have a deed and that someone else also has a deed, but you don't go and file your deed in public record. The other person does. Too bad, so sad, you do not own that property. You did not record your deed in public record, and therefore you have no ownership rights. Another reason this is important in New Jersey is because in New Jersey, whoever records a lien first is going to have first priority in that case as well. So when it comes to liens, which I talked about maybe last week or the week before, so you can check the video on liens. But when it comes to them, you have to record your lien as soon as it's actually a thing. Otherwise, someone else can come in and take higher priority than you. So those are two things that are not covered by title insurance. So make sure you do your due diligence in getting those items on your end, making sure you record your documents. Your title company should be able to do that for you. And also, if you don't get a survey, think about maybe having one of those. Now, after the investigation, the title company issues a document. In South Jersey, they refer to it as a title commitment. Up here in North Jersey, we typically refer to it as a title binder, but it's the same thing. It's going to list all the owners of a property, unless they were owners from before recording in public records was a thing. It's going to list the owners of a property, how they obtained the property, and insure against any defects that might arise, and give the policyholder peace of mind that they will cover and or reimburse any of the fees that are associated. Now, the two forms of title insurance policies that exist, buyer typically pays for both, but the lender could offer credits. There's a lender's policy and an owner's policy. The lender's policy specifically covers the lender, aka the bank or institution where you're getting your money. It's going to cover them against losses and make sure that they have first priority against that property when it comes to liens. That's going to be the case pretty much every time. Lender gets first priority against liens. Now, this does not protect the borrower, and that's why there is a second policy, which is known as the owner's policy. Now, the last point, what type of things do they actually search for? You might be thinking, well, I can search for this myself. Why pay for the policy? I'm telling you, if you're not a professional, pay a professional to do their job so that you can make sure it's done correctly. So some things that they're searching for, it's really anything that's a detriment to the buyer. Examples would be judgments against the seller. That could be child support, court orders, things like that. Lis pendens, which means pending legal action. We'll see that pop up as a notice. Maybe on Zillow you'll see it, and that means that a foreclosure notice has been given. Any liens, municipal liens, they'll search for institutional liens, construction liens, local and federal tax liens, state liens for unemployment. They'll also search for notice of settlements. So a settlement statement is what basically says all the fees and everything associated with the transaction, and that is given at closing or right before closing. And so this pretty much eliminates the opportunity for a seller to sell a property multiple times. So the example of that would be earlier where I said a seller promised you and someone else a property. We put things in place so that that no longer really happens. So that's pretty much title insurance policy. And you might say, well, they're doing all this, I don't really need an attorney. A title insurance company, title agent, they are not allowed and they should not give you legal advice. So you shouldn't be getting it from them. They shouldn't be offering it to you. Please reach out to your attorney for legal advice. And if you need recommendations, as always, definitely reach out to me so I can put you in touch with some people. And if you want the name of some good title agents, I also have worked with some really awesome people that I can refer to you on the title side. Other than that, shoot any questions or concerns over to me. Thank you so much for tuning in to today's talk. I think this is my longest video yet. Title insurance, there's a lot to it. So I'll break this down a little bit more. Survey, different topics like that are related to closing out transactions. I know I've talked a lot a bit about how to get started with home buying and some of the things you encounter in the beginning. So I'll do some videos coming up for my buyers that are toward the end of the process and want to learn about how to close out and actually get the keys to their home. So thanks so much again for tuning in today. I hope you all exhibit the best version of yourself today and every day this week. Have an amazing week. I will see you next Tuesday.